And welcome back. I'm George Philbeck. This is my ever-talented wife, Jacquie Sosa, and this is the August 1st numbers report for the Orlando and Central Florida real estate market. We curate these numbers the beginning of each month because we want you to have real-time data. We don't want you to have data that is literally a month or two or even sometimes 3 months out. And Jacquie and I are compiling this on a weekly basis every week, and we have the information that we need to share with you at the beginning of each month. So let's jump in. We're going to cover the Orlando market, what's happening in Central Florida as far as the housing market. There's a lot of data to cover. I'm a numbers guy. That's why you get me and not Miss Jacquie. She's more of the negotiating expert. First thing we're going to talk about is number of sold homes. What you're looking at is a little over 2 years of compiled data. We do this every single month throughout the course of the month and then the beginning of the month. And go all the way to the right-hand side of the screen. You're going to notice that July of 2023, we had 1,493 homes sold. Okay, that's down, especially if you go month over or year over year. July of 2021, we had 2,933 homes, and in 2022, 2,145 homes that sold. So what we're doing is we're seeing a drop in our home sales. We knew this drop was going to occur with the interest rates going up. We're going to cover that in just a couple minutes. It's expected. It's because the market's still a little bit dicey. There's good news and there's bad news coming, so stick around. We're going to cover it. I want to show you another bit of information I picked up. I grabbed this from Redfin. Let's take a look. So this is the Greater Orlando regional area, and it's a 12-week rolling. I will tell you that the data on this is ending, meaning it is only through the 23rd of July. So it has a lot of good information, but not the total amount of information. It's showing that we have 856 homes that were sold in year over year. That's down 11.8%. So that's a pretty good drop year over year. We've seen that drop further exampled in our graph, and you see how the decline continues to go. The next thing that I want to look at with you is the average sale price. So this is something everybody, especially all of us homeowners, are interested in. Is the price rising? Is the price falling? What do we project? Well, here's a spoiler alert. I don't see that we're going to have a diminishment in property values in Central Florida and all over Florida. Perhaps a little bit down in Miami in that area. We may see a little bit in Tampa as well, although Tampa's a great area. Anything along the I-4 corridor is terrific. Here's the reason why. The reason for that is that we've got an area that everybody wants to move to Florida. We've got great income taxes in there because we don't have any state income tax, which is phenomenal. We've got a pretty wide open economy down here. Our business and our tourism industry is still growing. And because people can live where they want to live now, there's a percentage of people that have more freedom to do so. Florida becomes very, very desirable. We've got coastlines on both sides of it. Yes, it's incredibly hot in the summertime. Holy cow. However, we've got 7 months that are just magnificent. So let's take a look now at our average sale price. And as I said, you're going to actually like this. So again, we're going to start on the right-hand side. And the first thing we notice that our sale price is $464,000, which is down from $474,000. But hold on a second. Let's take a look at what's happened in the trailing 4 months, which is March, April, May, and June of 2023. During that time, we've seen our prices increase, and we didn't see a decline until July. Let's go back to 2022, March, April, May, and then it drops a little in June, and then it drops in July, and then there is a drop in August, which is exactly what we're experiencing right now. Does that carry on with 2021, going back to March, April, May, and June goes up again, and then July, and then a little drop in August? The reason I bring this up is because this is the norm. This is our normal cycle. We're starting to see that the market it slows down a little bit when we get into our August and July, or August and September, and that is due to we're a regular community. We're not a come down in a snowbird community in Central Florida. We're a full functioning suburban community surrounding a great big metropolitan area with a lot of diverse employment. So we do see that kind of ebb and flow where it goes up and down a little bit. This is not unhealthy. What I like to see is that our prices year over year have increased. And that shows to me a healthy market, plus everything else we've just talked about. The next thing we're going to look on is days on market. I believe that we're in a fairly balanced market here in Central Florida. We're not going to experience a diminishment. The days on market graph we're going to talk about right now, this shows the number of days a home is on the market and how long it takes for that home to receive a contract. So what we want to do again is we're always going to go year over year. How does it look? Because what we do is we see in the days on market really shot up in January, February of 2023. And do we see that regularly? Yes, we do. January and February 2022. And then we're actually, we don't have the data that goes that far back for February of 2021. I stopped it at that point, but the fact is it did go up. And then it starts to come back down. Back over to July of 2023, we're actually down a little bit in what is our busiest time of year. So I do expect to see that every July it does come down. The number of days on the market drops a little bit, which that's good. This is all good stuff. We want to keep our eye out for what happens in September, October, November. And a good time to say that if you like this kind of data, you want to know what's going on in the market, you want real-time data, not 2 or 3 or 4 months behind. I would encourage you to like and subscribe, particularly subscribe to this so that it gets shown in your feed right away. You'll be able to get this. We'd love to have you as guests of ours, and we hope this is good information. We love putting it together for you. At least I do. Jacquie, not so much. She's the negotiator, as I said. All right, let's move on to interest rates. Now, we got a lot to cover on this one. So again, we're going to start with the right-hand side. You see the average, the trend gearing up greatly over the last 2 years, really somewhere around May. And we got into the 5% interest rate, and this is right in the middle of the graph. May 2022, we're at 5.28% interest rate. That was the last time we saw fives or below fives. And then, unfortunately, in September, because every September, we're going to talk about this as well, every September they have a Fed meeting. So they decided to raise the interest rates again, and they went up to 6.3%. Well, in July, we are at 7.39% for our average interest rate. Now, it is important to note that that's kind of a flat rate. What that means is that's the rate that everybody can get. It's based on a 740 credit score, 25% down or 20% down. They're both going to be about the exact same. We used the housing income is about $100,000, just to give you some information on what we're using in our graph. We said our housing income was $100,000 when we're buying a property that was $500,000 with 20% down. That's how we determined our interest rates, and we're going to base that on what the national interest rate. So let's look at a chart from the nationwide stuff. It'll show you some good stuff as well. What I'm interested in is what's going to happen in the next coming year, in the next 12 months, and that's what we're going to cover. So let's take a look right now. So according to bankrate.com, will the Fed raise the interest rates again in 2023? The Fed chief opens the door to even higher borrowing costs. What does that mean? That means that we have another meeting that's coming in September, and we're going to find out, are they going to raise the rates in September, or are they going to keep them where they currently are? As you see on the graph right now, our interest rates are very, very high. What I'd like to do is give my prediction. I think that the interest rates are going to be down in the fives. Remember, we didn't have fives until really May or June of 2022. Last time we saw the fives. I think we're going to see them again in about 7 months or so. But are they going to raise the rates? Let's take a look again. Back to this. Fed officials are seeing some progress at stabilizing prices, but the news isn't all good. Inflation in June rose 3% from a year ago, the slowest pace since August of 2021. Yet the overall measure masks how sticky other price increases still are. Some key household items like car repair services, bread, and pet food are still climbing at double-digit paces. Rent prices and the cost of dining out at restaurants continue to blow past the Fed's 2% price target. Taken together, inflation exceeding food and energy is up 4.8% from a year ago. Nobody likes inflation, and that is obviously a big concern, and that's why they raise interest rates to control the inflation. Fed Chair Jerome Powell has said households experience food and energy inflation most, but these so-called core prices tend to indicate the overall trend of where inflation ends up. Another major concern is that shocks that exacerbate food and energy inflation, again, can come out of nowhere. What does that mean? Well, it means that they're looking at inflation. Inflation is the reason we're raising the interest rates. Let's carry on with this and see what else they say. Greg McBride from Bankrate says whether the Fed continues to raise interest rates this fall will depend on whether core inflation makes notable progress towards the 2% target in the coming months. Remember just a couple seconds ago when we said that it was at 4.8%? that tells me we may raise the rate. Now, I'm going to put all this into a bow at the end of this and kind of say, well, okay, we've got, if the interest rates do go up, what does that mean? What's the challenge? But also, where is the silver lining? Because they are going to come down. We're going to cover that part in just a second too. So let's take a look at the screen again. The National Association of Realtor believes that the national average for 2023 will be 5.7%. That's terrific. However, we're currently at over 7% right now. So I don't care what the average is. I care what's happening right now. I'm interested in what's going to happen in the future. What are they saying about that? Let's take a look. Furthermore, they said that their interest rate forecast predicts that rates will be stabilized below 6% by the summer months at the absolute latest. Now, that's the good part. The good part is I believe we're going to be below 6. We'll be in the 5s again, and probably somewhere around February or March of 2024. What does that mean for right now? Well, it means that I think that we're going to have an interest rate increase in September. That's my prediction. That shouldn't freak everybody out. Does it slow down the market? Absolutely. We've already seen that in the previous where the markets dropped. We've got less homes on the market because who wants to trade a 7% interest rate that they'd have to buy with from a 3% interest rate you currently have? And that has a lot to do with it. So we're always looking at interest. We're looking at inflation. How does that affect our housing market? My forecast, long-term forecast, is that we are going to get to the point where interest rates go down below 7%, below 6%, we get into the 5s, particularly next summer. Going to be a great summer for buying and selling homes. Here's the secret though. If you want to sell your home, do it. You're going to get top dollar for it. The buyers that are out there are massively serious at this point. Otherwise, they wouldn't be in the market at all. Why would they? They have to buy. There's very little competition, which gives your home more value. And you're like, well, what if I buy a home? Okay, well, that's the challenge. Of course, you have to buy a home. Remember, there's not as many people out there looking, so you do have good negotiation. That's where she comes in. And I would strongly suggest you might want to do that, but don't buy down your interest rate points. And I covered that last month's video, and I'll drop the video link down below. Here's the reason why, though. A quick summary of it is, if you, let's say you're buying a $500,000 home, I'm just using a regular number. And in that $500,000 home, what you're going to do is you're going to buy down your rate from 7 to 6%. That will save you about $3,600 over the course of a year in savings because you have a lower interest rate. But you're paying $10,000 or 2 points, that's 2% of your mortgage, to buy that rate down. Now, you and I both know that if the rates drop to 5.5%, of course, if we have a 6% rate, we're going to refinance because it's a long-term savings. Most of us buy our houses for at least 10 years. That's the standard, the trend, and it's actually getting bigger. What I want to suggest, though, is you're spending $10,000 to save $3,600, and then you're going to refinance. So we've got every forecast. Everything is saying everybody believes that the interest rates will eventually come down. They'll probably do that in spring. That is my projection, that we'll see a reduction in the interest rates come February, and the meeting that happens in February by the Fed. We'll see another one in April, and we will be, Jake, in a really good place because inflation will be under control. Don't let that hesitate you from stopping to place your home on the market, but don't be sucked into the idea that you have to buy down the interest rates. We can talk more about that if you want to. My calendar link's down below. You can get on there, just send us an email or give us a phone call. Our text phone number's there as well. Let's move on to the important stuff. What you're looking at is the Affordability Index for Central Florida. The Affordability Index is created by a combination of home price average, interest rates, monthly payments with principal and interest, and what your debt structure looks like. So I have to explain this. Most of us carry some form of debt in a car payment, a student loan, or something like that, as well as a mortgage payment. Well, that's all factored into the affordability. For the graph we're going to look at again, we used $100,000 as the average home income, and we're saying that we don't have any other debt except for a mortgage. What we're shooting for is we want our debt to income affordability index to be somewhere in the 30 to 40% range. When it gets over 50, it's almost impossible to get a loan. Now, that's implying that you only make $100,000 as a combined family, or you only have $100,000 income combined family. You may have less, so it's of course going to be tighter. You may have more, so of course it won't be as tight. But that's what we're using as an average. I wanted to get that out of the way so you know what we're talking about and you have a reference point for it. So let's go back to this. You're going to notice in February of 2023, we really jumped up. We're at 49%, and then it went to 50, 51, 53, and then almost 55% in June of 2023. What does that mean? That means that over 50% of your gross income goes towards your mortgage. That is an incredibly high amount. What happens is we're literally growing so fast with our prices that we're really putting a lot of the properties, the people that make a little bit less than $100,000, we're really costing them out of the market. Now, interest rates play a huge part of this. I mean, a really, really big part, because that determines affordability. Remember when I talked about the fact that there was a $3,000 difference, $3,600 difference between 1 or 2% per year? That's $300 a month, right? That's a big deal. Imagine if it got down to 5%, we're looking at almost $700 a month. All of a sudden, a lot of more homes become affordable. So we're always looking at interest rates for affordability, because that has a lot to do with it, as well as the average home sale price. Now, we covered all of that in the beginning of this, and we covered the affordability. What I want to tell you is I think this is going to be a challenging couple of months. I think that we're going to see the housing market kind of get freaked out. Now, this is just Central Florida. The entire country is going to experience this, but they're going to experience it. And what you're going to hear is that the sky is falling and the world is coming apart. Stay tuned. Let's take a look at what's happening in our market. Let's make sure that we have great information that is absolutely timely every single month. And if you want to have information about your particular property, your home, your very specific micro market, there is, I'm going to put a video that talks, add a video to this. It talks about this report I do for my friends, my family, and it covers what's happening in your particular area. It's like this, except it's really about your community. I'll play that as soon as we're done. One more time, I'm going to ask you shamelessly, please hit the subscribe button. That way this shows up every time you need to see it, as well as a lot of other good information that myself and my wife Jackie put together for you. It's all real estate related because it matters, and so do you. Thank you very much. Have an amazing day. We'll see you real soon. Bye now. So the reports that we create for our friends and our family include, obviously, the information about the home, as well as the current estimated value, as you're seeing on these 2 pages. Now, we also go a lot deeper into home facts and the extended home facts as well. And this allows us to really refine our value. And you'll actually see that the last page we're going to talk about is the refined home value, which includes some adjustments that would be made as well. Now, this is a 81-page report that will be sent to you that is very specific to your home, your community, and everything else. It is important that you have all the facts when making such an important decision.